Hey everybody, welcome back. Welcome back, entrepreneurs. Today we're going to be getting into the Entrepreneur's Guide to Budgeting, planning your finances after tax season. Even though we're technically not completely out of the woods with tax season, we're still at the end of it. But these tips is for to prepare yourself for when we finish tax season, things that you should be thinking about and doing. With tax season is about to be behind us, it's the perfect time to reassess and plan your finances to ensure your business thrives throughout the entire year. But before we get into our lovely topic, I'm going to introduce myself. So, my name is Shane Harris, and around here on these social media streets, I'm referred to as Shane the Negotiator. And I help coaches, consultants, and service providers who are overwhelmed and lack guidance to achieve true financial freedom. And I do that by providing expert tax and coaching services. So let's get back into our topic, the Entrepreneur's Guide to Budgeting, planning your finances after tax season. So we're going to begin by analyzing last year's spending. So you want to start by looking at your last year's spending, your spending habits. Identify which expenses was essential and which ones you don't need anymore. You can get rid of. Understanding your spending habits can reveal opportunities for savings and more strategic investments. So you want to also begin with setting financial goals. So set clear financial goals, whether it's increasing revenue, reducing, or saving for expansion. Your goals should guide your budget decisions. You want to make sure these goals are specific, measurable, achievable, relevant, and time bound, which stands for SMART. That is the acronym. So the SMART criteria ensures that goals are well defined and attainable within a specific time frame, making it easier to plan, easier to execute, and easier to measure your success. So here's a business related example applying the SMART framework. So here is the goal. You want to increase the monthly sales of your e-commerce platform, right? So a specific would be increase monthly sales revenue of an e-commerce platform by 20% through targeted marketed campaigns, enhancing product listings and improving customer service, right? So then we get into measurable. Measurable, the success of this goal can be tackled through monthly sales reports, comparing the revenue generating before and after implementing the strategies. A 20% increase in sales revenue compared to the previous quarter will indicate that you have an achievement. It indicates progress. So let's go into achievable. This goal is realistic because primarily data and analysis has identified key areas for improvement, such as optimizing marketing efforts towards high conversion customer segments and enhancing the online shopping experience. Additionally, the company has the resources and capabilities that's going to be needed to implement the necessary strategies. Next, we're going to go into relevance. So increasing sales revenue is going to be important for companies' growth and sustainability. It aligns with the broader business objective of expanding market share and improving profitability. And lastly, time bound. The target is to achieve this 20% increase in sales revenue within the next quarter. This provides a clear timeline for planning, executing, and evaluating the strategies. So by setting SMART goals like this business can focus its efforts, resources, and strategies on a clear, achievable objectives, making it easier to measure the progress and revenue and the success. Okay, so that's just an example that I gave of an e-commerce that set some goals for their particular business. It will look differently for service-based businesses, and it may not be exactly the same. So you're going to be able to tailor that however it is for your business. That was just an example. So next we're going to go into forecasting revenue and expenses. So forecasting is about predicting future revenue and expenses based on historical data and market trends. This can help you anticipate financial highs and lows, ensuring you allocate resources wisely to maintain a healthy cash flow. Now, if you go back and catch either the Pathway to Financial Mastery or it was the Business Growth Playlist, I can't remember off the top of my head which one. I spoke about forecasting when I was talking about those financial statements. So go back to the playlist and find the financial statements segment, And it's going to talk a little bit about forecasting and how we actually do that, and and things about that. So for this particular one, forecasting revenue and expenses, you might want to get with your professional, your tax professional, or your accountant, or your CPA, whichever fancy term you want to use, to really help you with this part of things. Okay, so creating a flexible budget. So a flexible budget adjusts with your revenue levels. So it allows you to scale your spending up, down, or around based on the actual income that you receive, giving you the ability to respond to unforeseen challenges or opportunities. Next, we're going to talk about managed cash flow. So effective cash flow management is going to be important. Ensure you have enough liquid assets to cover your short-term obligations. This might involve adjusting payment terms with your clients or the vendors that you're working with to keep cash moving smoothly throughout your business. And again, if you go back and watch the earlier lives, well, it's going to be recordings now, where we spoke about cash flow management and those financial statements, it's going to go into a little more details on what these things are. So investing in growth. So you want to consider allocating a portion of your budget to growth initiatives. So whether it's marketing, new product development, or upgrading technology, investing in your business growth is going to be important for long-term success. Next, you want to do regularly review and adjustments. So budget is not a set it and forget about it type of task. Regularly reviewing your budget against the actual performance and adjust it as necessary. This iterative process will help you to stay on track towards your financial goals. So oftentimes when I have clients who come to me and they say, well, I had a budget in place. And I'm like, when was the last time you adjusted your budget? And they say, well, my budget, I've had the same budget for the last 2 years. Well, that may or may not work. Whatever the budget was that you set 2 years ago, it might be different. The budget sometimes can change every quarter. So it's a common practice, or it should be a good common practice for you to at least look at your budget and look at your financials so that you can readjust at up or down in your budgets every single quarter. But of course, we're talking about after tax season is something that you should be doing definitely. But I'm also letting you know that this should be a quarterly process because your finances can change every quarter. So the budget that you had for quarter one might be needing to be readjusted for quarter two because you might have spent too much or you didn't spend enough. And when I say not spend enough, it might be some areas in your business where you could allocate a little bit more funds to help your business grow, but you didn't put too much into that when you first created the budget because maybe the budget was tight and it wasn't available. So now you might have made more money and now you can allocate those funds to that to increase the we're going to conclude this. So proper budgeting after tax season sets the stage for financial health yearly. So by analyzing past spending, setting goals, and planning for the future, you can steer your business towards greater success and resilience. So teasers for the next one coming up, we're going to be expanding when to expand. So we're going to be identifying the right time to grow your team post-tax season, because as we're talking about after tax season, we'll explore how to know when it's time to bring in more talent and how it fits into your overall budget and growth plans. So in closing, thank you so much for joining me on this journey to smart budgeting. If you found these to be helpful, please like, share, and subscribe. And here's to a financial savvy and successful year ahead. And I am dropping my link. The link is going to be scrolling across the bottom of the screen, which is sociotap.com/SD Negotiator. So this is if you are needing any assistance with what we have discussed right now or anything that we have spoken about previously when it comes to tax and accounting, you can click the link and scroll down to tax and accounting and schedule a 15-minute discovery so that we can figure out what it is that you need and how I can possibly help you. If you need to file your taxes because you still haven't done so, click that link and schedule the time, and I can also still file your taxes at this stage. you're definitely going to be doing an extension because it's getting close to the deadline. And I have other clients that I'm currently working with that came to me on time. So we're likely going to give you an automatic extension and gives you more time to gather your documents to actually file your taxes. For everyone else who's already filed and everything is good with that, you can still schedule some time to me so we can start discussing strategies on what you can now do throughout the year to prepare you for the next tax season, because it's never too early to start preparing for the next one, and talk about tax planning with things and strategies that you can do throughout the year so that you can have a leg up in your business. So thank you again. Come on over here to the YouTube channel and subscribe if you have not done so. And if you have not subscribed or you're not following me on the other social media platforms, on TikTok, on Facebook, IG, go ahead and SD Negotiator is my handle on those platforms. Those platforms, I talk about different things. So you might want to come on over there and catch the information and the content that I'm sharing over there it's a little bit different. So until I come back next time, I hope you guys have a great and wonderful